Today, I'm going to explain one of the most important from the examination point of view for 12 marks, that is admission of partner. Here is the format: income or profit or revaluation account. That is, here debit side and credit side will be there. For debit side, expenses or losses. For credit side, incomes or profit. Here, debit side, two assets account, that is, assets value decrease. When asset value is decreased, we have to write to asset account the so and so amount. Here, next depreciation. That is, if value decreased of an asset, we call it as depreciation. So, to liability account. If liability increased, we have to write here the debit side. To PDD or PBD account, that is increase. If that is increase, you have to write here in the debit side. To expenses or losses. I have said already expenses. If any expenses or losses, we have to write here. Here in the credit side, by asset account, that is if asset value is increased, that is appreciation, we have to write here in the credit side. By liability decreased. Here if any liability is decreased, we have to write in credit side. By PDD, PPD account decreased, we have to write here in credit side. By incomes or profits, I have said already incomes and profits should be recorded in the credit side. So if we add all these, if we deduct a debit side, we get two partners capital account, that is profit transferred. If suppose if debit side is more, we have to deduct all these, we get by partners capital account, that is loss transferred. Here we can compare this format to asset account. If asset is decreased, we write in the debit side. If asset is increased, we have to write in the credit side, that is as a appreciation. If liability is increased, we have to write in the debit side. If liability is decreased, we have to write in the credit side. Increased is debit, decreased is credit. Here PBT increased, that is in the debit side. If decreased, we have to write in the credit side. Likewise, if expenses or losses, I have already said debit. If any income or profit, we have to the credit. This is the first step for calculation of admission of partner, that is revaluation account. After that, second step is partner's capital account. From old balance sheet, we have to take capital, reserve, and P&L. Capital we have to take from old balance sheet, that is reserves and P&L account. From revaluation account, profit or loss. If there is any profit in the revaluation account, we have to write. Or if there is any loss, we have to write in the partner's capital account. Next, fr- from adjustment. If there is any adjustment in the problem, that is new partner capital and goodwill. If any new partner bring any capital and goodwill, we have to write in the partner's capital account. Likewise, let us see first problem. Here, Amar and Bharat are partners, sharing profits and losses in the ratio of 3:2. 3 is Amar's, Bharat's is 2. That is 3 by 5, 2 by 5. Their balance sheet as on 31/3/2020 was as follows. Here, balance sheet as on 31/3/2020, liabilities is given, assets are given. Liabilities side, creditors is there, P&L account is there, reserve fund is there, capitals are there, Amars and Bharat's respectively. In the asset side, cash in hand is there, debtors, investment, furniture, building. Here, let us see in the adjustment on 1/4/2020, Chandra admitted into partnership on the following terms. Here, Chandra is admitted as a new partner. Chandra brings in rupees 30,000 as his capital and 10,000 towards goodwill for one-fourth share in future profit as per accounting standard 26. Here, depreciation furniture by 10% and appreciation building by 20%. Investment is valued at rupees 13,000. Here, we can say depreciation furniture by 10%. That is, first we have to calculate revaluation account. Here, depreciation is 10% of furniture. What is the furniture amount? That is 25,000 into 10 by 100 means we get here. I will show you solution 1. That is, two furniture account 25,000 in 10 by 100 we get 2,500. This is revaluation account, debit side and credit side. Here again, appreciation building by 20%. If there is any appreciation, we will record in the credit side. As I mentioned earlier, here building is 50,000. For that, 20% appreciation means here I will show you by building account 50,000 in 2,500, that is 10,000. Here next, investment is valued at rupees 13,000. Here it is 13,000. Here investment is 15,000. So it is investment values is 13,000 and here 15,000. 2,000 is difference. That difference amount is here to investment account. That is investment is decreased, right? 15,000, 13,000. We get 2,000. Here asset value decreased. So I am writing in the debit side. If there is any asset value is increased, I would have written in the credit side. Likewise, after that, there is nothing. Prepare revaluation account, partners capital account, balance sheet. So we have already preparing revaluation account. That is, we have recorded debit side, that is depreciation, and here investment, and in the credit side appreciation of building. So let us see format now. Here assets are recorded, assets are recorded. Liabilities increase. There is nothing in the question as I mentioned. Liabilities adjustment is not at given, so we should not write or we should not record in the revaluation account. So after that, if we add debit side and credit side, credit side is more, that is 10,000. If we deduct these 2,500 and 2,000, we get 5,500. We should not write directly. That is two partners capital account profit transfer. That is Amar's is, I have already said 3 is to 2. 3 is Amar's, 2 is Bharat's. So 3 by 5, 2 by 5. We get 3,300 and 2,200 is Bharat's. So if we add all these two, we get 5,500. In this way, we have to create or we have to write a revaluation account. Next, here we have to write. I've already said in the basics, that is partner while preparing partner's capital account from old balance sheet, we have to take capital, reserves, and P&L account. First, we have to take this old balance sheet, right? This is old balance sheet. From that capital, we have to take Amar's is 50,000 and Bharat's is 40,000. We have to write here. First, we have to write here in the credit side. That is by balance brought down. That is 50,000 is Amar's, Bharat's is 40,000. Chandra's column will be nil because it is from old balance sheet. After that, I mentioned in that we have to take a reserve fund, that is 10,000 it is, and P&L is 5,000. We have to share this as 3 to 2, that is 5,000 into 3 by 5, that is 3,000 is Amar's P&L and 2,000 is Bharat's P&L. Like that, reserve fund. I will show you here. P&L account 3,000, 2,000. Chandra's will be nil. Reserve fund for 10,000, 3 by 10, sorry, 3 by 5, 6,000. For Bharat's 2 by 5, 4,000 will be. Next, after that, I have mentioned here from revaluation account, if there is any profit or loss, we have to write in this. Right. Here there is a profit, right? By revaluation account, profit 3,200, 300 and 2,200. How it is? Here I will show you 3,300 and 2,200. Right. Here, after that, I will go here. From adjustment, new partners capital and goodwill. Here, Chandra brings 30,000 as his capital, 10,000 towards goodwill for one-fourth share in profits. So here Chandra brings 30,000 as a cash or capital and 10,000 towards goodwill. We have to mention this. Here by cash, that is 30,000 plus 10,000 goodwill. So we have to write in the Chandra's column, that is 40,000. After that, by Chandra's capital account, we have tried the share of goodwill should be distributed to old partners. By Chandra's capital account, we have tried share of goodwill, that is in the ratio of 3 to 2. That is 10,000 into 3 by 5 and 10,000 into 2 by 5. We get 6,000, 4,000. We have to write in the Amar's column and Bharat's column. Chandra's column should be nil. And this should be here to Amar's capital account. You have to write in the Chandra's column, that is 6,000 by to Bharat's capital account, that is 4,000. We have to write in the Chandra's column, and afterwards we have to add all these Amar's column. We get 68,300. We deduct there is nothing here, right? So we have to write directly 68,300. If we add all Bharat's column in the credit side, 52,200. If we deduct these two, there is nothing else. So we get 52,200 as it is. And if we add all Chandra's column in the credit side, 40,000. If we deduct 6,000, 4,000, we get 30,000 as balancing figure. Balance carried on balancing figure. Afterwards, you have to prepare balance sheet, that is new balance sheet. Here, balance sheet as on 1/4/2020, we have to prepare liabilities and assets. Here I will show you how to prepare balance sheet. Here creditors, we have to write as it is as a liability. P&L should be here creditor we will mention. First creditor we have to write 20,000. After that capital. Here reserves we have already taken in the P&L already taken in the partner's capital account. A reserve fund we have already took. Here capitals we have took, but we have to write here as new partner. That is Chandra has entered, right? Here I'll show you. Here two balance carried down, right? 68,300 is Amar's, Bharat is 52,200, Chandra's is 30,000. So we have to write here as a capital 68,300, 52,200, and 30,000. If we add all these in the inner column, we get 1,50,500. So liability side is completed. Now We have to see cash in hand. We have to write 15,000. Debtors, there is nothing else. 20,000. We have to write investment. Here, I'll show you cash in hand. 15,000 we have already recorded. There is in the old balance sheet, right? Here, he brings, it is by cash, he brings 40,000, right? Chandra has bought 40,000. Add all these two, we get 55,000 as cash in hand, right? Stars, there is nothing. So we have to write from old balance sheet as it is in the new balance sheet. And here investment 15,000 is was earlier. Here in revaluation account there is 2,000, right? If we deduct, we get same amount as mentioned in the adjustment. And here furniture we have to write 25,000 less depreciation of 2,500. It is there in the revaluation account. If we deduct these two, we get 22,500. Next building, 50,000. And appreciation, if you add all these, we get 60,000. I will show you. Here, they have mentioned cash in hand, debtors, investment, building, so furniture, and building. They have mentioned all, right? Here, I'll show you new balance sheet. If we add on the asset side, we get 1,70,500. Liability side total is 1,70,500. I hope you have understood the problem, dear learners. If there is any doubt, you rewind that video and watch the video again. Thank you.